Hello there, welcome to this video where we're going to be diving into the candle anatomy. And if you're just getting started like I was a few years ago and looking at the charts and being very intimidated, not knowing what candles meant and all these indicators on the screen, so it was very intimidating. I want to be very objective and want to simplify things and go straight to the point. Okay, so let's go ahead and get started. First things first, let me see here. Okay, so this is basically the candle. Okay, and what are candles? Basically, candles are one of the ways that we use to measure a price movement in regards to time. Okay, we don't know if this candle is a 5-minute candle, meaning it took 5 minutes for this candle to form, or if it took an hour or a day or a week. Okay, so but how does it work? First off, a candle in this example right here, it started, or it opened, right, started like at the top of the hour or at the top of the minute. It opened here, then it went below, left this little wick. We call this as a wick. Okay, so it's just to basically show the lowest point, that after the open it went low and then it continued to go higher and higher and higher, forming the body of the candle, went all the way to the highest point. You know, on the 1 minute, let's say this is a 1 minute candle, went all the way here, which is the highest point, then it retraced a little bit and it closed below the highest point, and that's why it left that little wick. Okay, and the similar way it was is for the bearish candle. In this case is the opposite. It opened at the top, then it went higher and it started dropping all the way to the lowest point, and then it retraced a little bit, closing right here, and left a wick showing, hey, we have a lowest point right here before it closed. Okay, so it retraced. And in this figure on the left side, I just put in here just to show you basically the movement that the price did. So it started here. Let's say if it's a 5-minute candle, the first minute basically dropped 1 minute. It was like dropping, and then it started going higher. Second minute, third minute, fourth minute, right here all the way to the top, and then for 1 minute it retraced, finishing the 5-minute candle right here. So it formed basically this shape of a candle. Okay, so why is it bullish? Like, this is a bullish candle. It's because it opened and it closed above. Okay, if it opens here and it closes below the open, and then it's a bearish candle. Okay, let me show you an example on the chart because it's a little bit simpler to understand. Now, if you look at this chart here, you're going to be you don't know if it's a 1 minute candle or if it's a 10-15 minutes. You don't know until you select right here at the top. You can see it's a 4-hour candle. So which means basically when this bullish candle here, it opened here at the bottom, went low, you can see right there, and then it started going higher, and it retraced a little bit to finish the 4-hour. Okay, so if I switch to 1 minute, you'll see that it's basically the same. 5 minutes the same. The only thing that basically changes is the time that it took. Okay, before you continue watching this video, I want to quickly let you know that now you have the opportunity to join our Discord community, where you can have access to our exclusive content to help you learn how to day trade profitably. Besides that, you will also find other ways to have multiple streams of income and become part of a community of people that, just like you, want to achieve success. Just click the link in the description of this video or visit levelxtrade.com to have instant access. Now back to your video. You can always switch to a line, and you can see that's, you don't have much information. That's why we like to use the candlesticks or candle patterns to basically show us the format and the highest point, the lowest point of the candle, and also point of reference to the previous, as well as what we predict to be the next candle. Okay, let me show you something else too on this PDF that you can have access in our community. Basically, these are the candle moves. You have, the first one is the break of a high. So if you have a candle here, right, it opened at the bottom, went down, high, low, it closed, and then the next candle, it went hold on, yeah, it went low and then went high, and then it closed above. So it broke the highest point. We call it a break high, okay? And then break low, it's when a candle that is bullish, now the bearish candle just opened right here at the top, went high, and then boom, broke the low of this candle. And then we have a third pattern, which is the inside bar, and it's a candle that didn't break the high or the low of the previous candle. It just stayed inside this range. We call it an inside bar, okay? And an inside bar is an indecision candle. It's a candle that we don't know if the price is going to continue to go higher or lower. And I'll give you examples of that on the chart right now to make things a little bit easier to understand. Okay, so if I see this pattern right here, or this portion of the price, okay, right here, so you have this going down, this candle that went down, the next one opened, went lower, and it closed inside, right, but it broke the low, but it closed as a bullish candle right here. Now, as you know, we have better chances of the next candle, or predicting the next candle, for this candle to be a bullish candle and breaking the high. And it did, went low and then went high. Again, here we have better chances that the next candle is going to be a bullish candle, or at least break the high. In this case, this candle did not break the high, but it did come low, went high, it couldn't break the high, but it closed a bullish candle. Same here, we go in, predicting basically the next one is going to finally break the high, this one finally breaking the high, until the bearish candle right here broke the low. Now we switch our bias per se, right? We have better chances that the next candle is going to be bearish, right? So you've got a very big candle, and it's an engulfing, meaning it took 1, 2, 3 candles just with one candle, right? And then it retraced a little bit and went low. And you can see that following order flow, that this went a little bit higher and it closed bearish, a little bit higher, closed bearish, a little bit higher, and closed bearish. And you'll see that throughout these video series that I have for you, you know, studying order flow, structure, candle formation, the power of 3. Basically, they all have similar movements, which means it goes low, high, low, right? And then high, or another candle form, low, or open, low, high, low. And basically like that until it breaks here, and now we switch the order flow. That's the simplistic form, and we'll discover or cover that on, you know, in terms of the market structure and order flow in the next video. So basically the anatomy is this. I hope to have clarified and simplified a way for you to read the candles. Just keep it in mind, there's basically 3 patterns. We're going to either break the high or break the low, or inside. In this case, we had one inside candle, which is an indecision candle. And then other than that, it's just basically changing time frames to know how much time it took for this candle to open, low, high, close, right? So basically that's what it is. So thank you so much, and I'll catch you in the next video.